Hey guys, Pav here, lead market analyst at Swyftx, and in a nice continuation from our story last week, which if you didn't read, you can still catch it. Just head to Swyftx Learn and you can catch it in the insights section. Essentially, I talked about the idea that maybe the market's getting a bit ahead of itself, potentially not thinking about interest rates correctly. And this has been a bit of a central theme that I've had on how the markets are moving right now. That what we did see in the most recent downturn in the market was a dollar liquidity crunch. We saw a lot of things converging into the back end of this year that really weren't too conducive to risk on assets and the crypto market in general. We have seen weakness in the broader market at the back end of this year, which not many were expecting, but it's nice to put together the pieces now and see, look, there was potentially a fundamental reason why. And if you did miss it, I recommend you go check this out as well. But in this week's edition, we're basically going to continue on that idea that maybe we are starting to see the market get reinvigorated by a couple of things that have happened this week, which we'll dive into right away. We can't really understate the market sentiment right now towards what's the future of interest rates look like, what is on the horizon that could see conditions easing as we have been through a pretty tight monetary policy regime since 2022 now. It's been a few years. The market's had to deal with blow after blow, things not getting easier. We might be at that sort of pivotal point right now where things could be swinging the other way. Now, I'm not saying that this is going to happen overnight. Could take months, could take years to play out. But essentially, we did see some of that balance sheet runoff that we were talking about last week come to fruition. That has stopped now at the start of December. But what's also happening is there was some interesting comments that Trump made at the start of this week with journalists that basically tipped his hat towards Kevin Hasset becoming the new Fed chair. Now, this is significant for a couple of reasons. Now, while he hasn't confirmed that Kevin has got the job, Big Kev as we like to call him here on the show, he has laid the groundwork that he's potentially a nominee that he's quite fond of. And it should be stated that Hasset has been a part of the Trump camp since his last term. His capacity this term has still been somewhat of an advisor. And he has come out even more recently saying there is grounds behind why Trump wants rate cuts, and he's looking to help potentiate that reality that we should see further rate cuts into the new year, or maybe even this year, we could see the market move in that direction too. But what's important is obviously we talked about over the last 2-3 editions, how the market's expectations for interest rates, which can be described with this chart here, they've really come back to almost nil if you follow the black line. This indicator basically measures what are the overnight lending rates that some of the major institutions are paying right now. Bit of a forward proxy for what the market is expecting that interest rates will be. We can measure what they're expecting. We saw that as soon as we had that hawkish remark back in November and October from Fed Chair current Jerome Powell, they saw the markets take a bit of a de-risking in light of that new information that, look, we may not get further rate cuts. That was quite a sobering moment for the market if you don't remember. But yeah, essentially, if we do see this new candidate potentially be Trump's favorite, that does swing the odds in the favor of, look, conditions could be looking to ease as Trump's been calling for all this year. We've all seen the playful banter, or if you want to call it playful, the banter between Trump and Fed Chair Jerome Powell for this whole year, him wanting to fire him. There has been this disdain between the two. And this is important because in 5 days' time, we do have the FOMC, so the Federal Open Markets Committee, having their get together, having their sit down and deliver what's going to be the next key decision. Will we see a rate cut or will we not see a rate cut? And again, just to reiterate, rate cuts, while they don't move markets by themselves, it is increasing the availability of cash in the system, which we know for Bitcoin through historic data has proven to be quite impactful. And we can see even this year, when we do see this particular black line move to the downside, which means the market is expecting cuts, the crypto markets have had a bit of durability in their move. We have seen rallies that can continue when the expectations for rate cuts are either staying steady or we're moving into a more dovish stance and they're actually expecting more rate cuts in the future, as we saw in this July to September period. Now, again, just to breathe back into last week's write-up, we talked about how the swing of people's expectations has been just unreal. And if we really dive into the data, we can see at one point the market was almost putting it as a given heading into October that we were going to see, again, this rate cut in December. This is looking at the December contract, just to be clear here. And now we can see when we had that hawkish stance from the Fed, that really nosedived. We fell all the way back down to what's this 50.14%, almost halved market's expectations. In the last couple of weeks, we've seen this renewed faith that, hey, look, it's a good chance it's going to happen in this December meeting. So this kind of sums up the market for me, honestly. When we look at what's happened in the last month, it seems like it's drawn on for much longer, but there has been this flip-flopping, complete 180 reversal twice now, and what the market is expecting is going to happen in such a short window of time. And it resembles why we're seeing the sentiment being where it is. All in all, the next 5 days are going to be pretty interesting to watch and see what happens. From here, if we do see that rate cut get delivered, that then opens a conversation of, okay, what does the rate cut situation look like next year if we have someone who is pro interest rates coming down as Trump wants them to be next year? And the US economy, largest GDP in the world, largest consumer base in the world, it really does hold the basis for the global business cycles. And crypto is just a reflection and understanding what the market is thinking is the global economy is going to do next. So it's a very pivotal time for the market. But if you like the content today, make sure you check us out again next week. Give the channel a like and subscribe. You'll always be notified of when new updates are available, and let us know your thoughts. It'd be good to know how you're thinking about the market heading into the back end of the year. You might be taking a bit of a break, which, to be honest, it's been a pretty rough year, so I can understand why you might be doing that. But thanks very much for watching, guys, and we'll catch you again next week.